Good morning, everybody. It's Izabela Szatkowska here, a partner from Tamimi & Company. Just a quick good morning note. We're all here, we're ready. We intend to give it 2 more minutes before we start to deliver the presentation. I hope it's okay, and we'll be back with you soon. We just want to give a chance to some more participants to register and start alongside all of you at the same time. Well, I think we've got a really significant group already. I hope you all can hear me well. We would like to start. Once again, good morning, everybody. My name is Izabela Szatkowska. I'm a partner in corporate structuring team. I will start the presentation of today. Our topic is, as you know, economic substance regime and all you need to know. Technical difficulty. I'd like to move the slides. Apologies, everybody. Somehow the slide is not. Yes, that's fine. Apologies for that, a technical difficulty. Just by way of introduction, today you will have a chance to hear thoughts about the economic substance regime that a number of us will share with you. My colleague Shiraz Khan is the head of our tax practice. Shiraz is a solicitor, but he is a tax expert. He's got in-house and private practice experience, a number of years. He's advised clients on cross-border transactions. He would look into quite complex structures or those that cover, fewer jurisdictions. It really depends on the case in relation to tax elements that are relevant for the party duration. He also advises family businesses. He is our guru when it comes to the VAT regime, not only in the UAE, but also in light of the other jurisdictions and what is happening in the Kingdom of Saudi Arabia and Kuwait and other countries. As you know, tax regimes really differ through the region. We also have with us my colleague Nov Al-Kafaji. Nov and I, we work very closely in relation to corporate structures. Nov has about 8 years of experience working in private practice and also with governmental authorities in the legal field. She has done a number of corporate structuring formations, liquidations. She advises clients on regulatory submissions. And of course, she is also very well aware of details of the economic substance regime. We also have with us Janet Gori. Janet is an associate in Shiraz's practice, in the tax practice. Janet specializes in VAT and corporate tax aspects of matters, usually in the transactional concepts, when there is an M&A or some kind of restructuring. And she, of course, will share with us her knowledge in relation to the economic substance regime. And finally, maybe 2 words about myself for those of you who have not met me before. I'm a partner in corporate factoring team. I have now over 16 years of experience advising clients. I've also spent some time in-house as a general counsel of a regional conglomerate, but at the moment I advise clients of family businesses, but also large corporates in relation to structuring efficiencies of their businesses, deregistration, transfers of licenses, economic substance issues, and many more. As you can imagine, of course, we are just highlighting some of the areas of our experience to you by way of introduction. Today, we would like to cover the economic substance regime, but when we discussed the webinar and when we really designed it, we thought it would be important for us to give you some highlights of the regime itself by way of a refresher. There was a point in time when the regime was introduced and there was a lot of interest in the regime, but then of course we all started focusing on other matters. I'm sure that we had, you had a lot of things that your businesses needed to dedicate time to throughout the past month. Then of course, the pandemic that hasn't completely left us, that we are already on the right track. And we thought it would be worth doing a little bit of a refresher, tell you where that regime is, what the latest developments have been, and to guide you about the key steps that you would need to take as a business. Of course, we will be more than happy to help you with those steps and to share further details after the webinar. Now, on the organizational side of things, you might have been able to notice that you would be able to share comments with us and questions. There is a chat box that you would be able to utilize, and we intend to monitor the questions and answer some of those questions towards the end of the webinar, should the time allow. Now, let me move to part 1 of the content for today and the overview of the economic substance. We'll tell you about the regime itself, what the applicable legislation is as we start today, who that legislation applies to, what kind of businesses need to make sure they meet the requirements prescribed by the economic substance regime, what the key requirements are, and of course we'll tell you about the potential sanctions that may be imposed on businesses in case they are found incompliant with the regime. But to begin with, why economic substance regime in the first place? Why has it been introduced in the UAE? Well, the answer lies outside the UAE and within the UAE as such. The OECD for a number of years, if not decades, they've been looking into the way that countries operate, into their tax regime. And the European Union has been going through a similar path. And as you might be aware, there were a number of discussions concerning jurisdictions that could be considered harmful tax jurisdictions for the jurisdictions that apply quite thorough and stringent taxation regimes, jurisdictions that potentially could somehow make it easier for money laundering activities, some other criminal activities to be carried out through. And essentially, international organizations, and the main one would be the OECD, were in contact with authorities of the UAE specifically, but of course in contact with other countries in respect of the tax regime. Of course, as a number of you may know, for individuals living in the UAE, really the broad brush position is that there is no payable income tax, but it's not necessarily, the way that the tax law aims it. The tax law does have a regime. It's just that implementation has been quite relaxed by the authorities. But the bottom line is, as a result of those discussions, you may remember the UAE at some point before the regime of economic substance was introduced, the UAE over a period of time ended up on the list of those countries that could potentially be considered tax harmful jurisdictions. And of course, the UAE didn't want to continue being treated as that jurisdiction. The authorities got into discussions with OECD, who looked into the framework. Then the laws of the UAE were under review by certain bodies within a European community, European Union, and that's really the history. And as a result of those discussions, we ended up really implementing the regime. You will also see on the slide that you would have in front of you at the moment that the European Code of Conduct, group standards, references substantial activities. Not will tell you today about relevant activities. That's something that is really a key term in understanding what businesses are subject to that regime. And of course, the European Union Code of Conduct also references concepts of the tax haven countries. Right? So in 2019, we saw an implementation in September of the Convention to implement tax treaty related measures to prevent base erosion and profit sharing. These are the two key terms, the prevention of base erosion and profit sharing. These were the two key focus areas really of ECB and EU's work and discussions with the UAE authorities. And of course, the outcome of that convention was that the UAE made a commitment to adopt standards agreed with those external bodies across the UAE, the standards on economic substance regime that would apply also to free zones, so to onshore territories within 7 Emirates, but also to economic free zones across all 7 Emirates. And what is the applicable legislation in the UAE that could guide us through this new regime? And it is new because, of course, we are going to see implementation and practice of duties that have been imposed on companies under the regime going forward. There is a lot that we know, but there is still a lot ahead of us. The pieces of legislation that are really key for the economic substance regime are the Cabinet of Ministers Resolution number 31 of 2019. It concerns the economic substance regulations themselves. It has since been amended. A ministerial decision of 2019, there is a number typo, I'm sorry, it's 215 on the issuance of directives for the implementation and provisions of the Cabinet decision. So again, that's the decision that goes back to the Cabinet of Ministers resolution. And the Cabinet resolution number 58 of 2019 that determines regulatory authorities concerned with the activities that the core resolution 31 of 2019 mentioned. So these are the three main pieces governing the regime. Now, the Ministry of Finance have been very active in relation to the regime. They wanted to, and they want to make it as user-friendly as possible for companies to find a way throughout the regime. And the Ministry of Finance also published a flowchart. There is a relevant activity summary. There are some guides that the ministry every now and again would publish. And of course, we use those as supportive indicators when we interpret the pieces of legislation. So when we share things with you, they would be based on the legislation, on those guidelines that the Ministry of Finance wished, and also on our understanding as to what really that regime means. Well, you can say that's all great, but does the regime apply to me? Does it apply to my business? I think that's the question that we've been getting more often from clients than any other question in relation to the regime. And in order for you to know whether the regime applies to you, there are certain criteria that can help you really understand whether it applies to you or whether it actually applies to you, but in a specific case of a specific entity. You don't really need to worry about duties for you to fulfill under the regime, because although in general it captures the activities the business conducts, you wouldn't really meet the other requirements, but let me take you through that quickly. Now, under the regime, a licensee, so whoever, I mean a natural or a judicial person that has been issued a license or an incorporation certificate or a transfer of incorporation certificate, depending on the document that the given authority issues to register the business, a proof of legal personality, proof of legal registration, that entity in principle, whether onshore or in a free zone, and regardless of the free zone, is captured into the business.
Hi, Isabella, we can't hear you. If you just bear with us, we're just trying to resolve the issue. It's a small technical issue, which should be resolved very shortly. Thank you.
Hi, we've just lost Isabella for a moment. Nof, could you start your section and then we might go back to Isabella once she's rejoined? Is that okay, Nof?
Yeah, sure, no problem. Hi, everyone. I'll just start my section and we can go back to Isabella's once she's back. So jumping right into who the economic substance regulations apply to. So basically, every company in the UAE, whether free zone or the mainland, that conducts one of the relevant activities is subject to the economic substance regulations. So here are the 9 relevant activities. So it includes a banking, shipping, holding company, insurance company headquarters, intellectual property, investment fund management, financing or leasing, and a distribution and service center. So a company may not have one of these relevant activities on their license as such, but it may in fact be conducting one of the relevant activities by way of generating income through one of these relevant activities, but it's not mentioned on its license. And that company that may not be licensed with one of these relevant activities is still subject to the economic substance regulations. So it is really, when we do our assessment of whether or not a company is subject to the regulations, we look beyond just the license activity and we look at how the company is generating its income. Is it, doing business with foreign connected persons? How is the income generated? Is it outside the UAE? Is it within the UAE? And this basically allows us to assess whether a company in the UAE is conducting a relevant activity. So it really does go beyond the license activity. So looking at for most common relevant activities, we have a holding company, headquarter business, the service center, and the distribution services. So for holding companies, they do have a lower compliance requirement under the regulations. This applies to holding companies that act in the pure sense of a holding company, that generate income through holding shares or equity interest in other companies and earn dividends from capital gains. So these pure holding companies have lower compliance requirements compared to other relevant activities, and that's purely because the nature of its business. However, if there is a holding company that is generating income through perhaps another relevant activity, then it would be subject to the normal set of conditions that are applied for all relevant activities. So it's only the pure holding companies that are in the category of obtaining revenue from holding shares in other companies. Those are the type of holding companies that are subject to the lower compliance requirements. For the headquarter businesses, these are businesses that are situated in the UAE and that have the majority of the management, the senior management of those global companies situated in the UAE, and that they are responsible for big decisions, risks, and activities of those group companies, those foreign connected persons outside of the UAE. Similarly to headquarters, service center is those type of companies that are in the UAE and they are engaged with services provided to companies outside of the UAE, which are considered as foreign connected persons under the regulations. And the services are provided basically outside of the UAE. And that's the same for the distribution center. sorry, there's a bit of delay with the slides. So what are the key requirements and the key conditions? So if a company is conducting one of the relevant activities, what are the conditions that the company must adhere to? So we'll go into these within the next slide. So these are the three main conditions that a company conducting a relevant activity must satisfy. So the first one is to have adequate employees, physical assets and expenditure in the UAE. In the regulations, there's no real definition of adequate. So we are of the view that adequate is in relation to its activity. So if a holding company has 1 or 2 employees, this would be considered adequate in relation to its activity. So the number of employees is not really defined by a particular number, but it's in correlation to its relevant activity, and that's the same for physical assets and expenditure. The main concept of the whole economic substance regulations is that the core income generating activity of the company is undertaken in the UAE. This is the main, substance of the whole regulations, that the activity shouldn't be conducted outside the UAE. It should all be within the UAE. And the final condition is that the company is directed and managed in the UAE. Board meetings should be held at least once every year in the UAE. And if it's for a branch where a company does not have, or an entity does not have a board of directors, then that manager should be situated in the UAE, and those decisions should be taken within the UAE itself. So we'll look into these in a bit more detail in the next slide. So employees, assets and expenditure. So as I discussed, that the adequate level of employees, full-time employees, in relation to its business activity, along with expenditure and physical presence, meaning that, physical presence, that they have a physical office, they have adequate level of assets and adequate level of employees. Now, when it comes to employees, there are a number of businesses in the UAE that, may not know if they do have adequate number of employees or not. And if they don't, how can they rectify that position in order to be in compliance with the regulations? So under the regulations, there is an option for licensees to outsource certain activities, and they can outsource employees, which I'll come to in a few slides. But they can engage a third-party service provider that has adequate activities or premises, for example, for sharing offices. If there's no if a company does not meet the physical presence requirement, they can outsource that and outsource certain employees. There are some conditions that the company must adhere to when it comes to outsourcing. I will discuss it in a few slides, but just briefly, that the company must have adequate level of supervision and control over the corporate service provider or the relevant entity in which it's engaging to outsource, and that the company must evidence that this outsourcing is not to circumvent compliance with the regime, and it's not to just satisfy the conditions in order to just be compliant, because the authority will look into the relevant activity and assess whether it is even adequate or whether it makes sense for this company to outsource to begin with. And the last one is substance of outsourced entity cannot be counted multiple times by multiple entities. So that I will come to that in further detail when I discuss the outsourcing. When it comes to directed and managed, so as I discussed previously, board meetings in the UAE must be conducted within the UAE, and this also depends on the relevant activities undertaken. A recent development on this, and in consideration with COVID-19, the Ministry of Economy has recognized that it is slightly difficult now with the current situation for board meetings to be conducted within the UAE, and for managers or directors to come into the UAE in order to satisfy this condition. So they have given an extension, and they have given, consideration for this period in terms of meeting this condition, which is available for companies to take if they find themselves in this difficult situation. Managers and board members having the necessary knowledge and expertise to run the UAE business. Minutes must be minuted within the UAE and present and kept within the records in the UAE. And for cases of a branch where there is no board members, the sole branch manager cannot be outside the UAE. They really have to have someone on the ground to evidence that this entity is actually being managed on the ground within the UAE itself. And that's a condition that must be met for branches. So now coming on to the outsourcing arrangements and who can outsource and what can a company outsource and any other additional considerations. So companies can outsource certain parts of their activity or certain parts of their employees and physical office to a third-party service provider or a related company. So the things that they can outsource are things such as employees, the physical assets that are required, office space, for example. But what cannot be outsourced is the core income generating activity requirement. That's something that can't be outsourced and must be managed by the company itself. And while outsourcing, a company must have the adequate supervision for the outsourced activity. And the corporate service provider itself must have adequate substance in the UAE as well. So there are entities within the UAE that can provide these services, and that can assist companies that may, meet some of the conditions but may not meet all. So there are options in order to satisfy these conditions if you find yourself conducting a relevant activity. I'm going to pass the slides over to my colleague Janet, who will go through the remainder of the presentation along with Sherez.
Right. Thank you, Naf.
Sorry, Janet, if you could check if Isabella's available to carry on with the slot before. I don't know if Isabella's managed to come back on.
Is Isabella there? No. All right, I'll just carry on first. Just give us a second with the slides. All right, while we wait for the slides to load, you have just heard from my colleague Naf regarding the key requirements that you normally would have to meet in order to satisfy the economic substance test. Now, in certain circumstances, the regime actually recognizes, according to the nature of the relevant activity that you conduct, you may be subject to a lighter set of economic substance requirements, or you might be subject to a heavier set of economic substance requirements, which I'll come on to in the next slide. Now, if you're a pure holding company, you would only need to satisfy a reduced set of substance requirements, and this is what Naf has touched on earlier. So just to recap, a holding business is a business that's primarily holding or acquiring equity interests, and you only earn income from dividends or capital gains. So you do not conduct any sort of commercial activity. Okay, so if you do fall within the definition of a holding company, then the lighter set of economic substance requirements would apply to you. Now, what does that mean? You would only need to, first of all, comply with your existing reporting or compliance requirements. So, that's been already set by regulatory authorities. So say if, for example, a free zone requires you to renew your license every year, submit certain documents, you would just need to carry on complying with those requirements. Okay. And then secondly, you will need to have adequate employees and physical assets to carry on that holding company business. Now, this may be in a form of, say, a service provider that's providing you with services, or do you have, if you only have directors, are they fully qualified to just conduct your holding company business? Because in some certain cases, that would be adequate. You don't actually need, actual employees to run your holding company business if your directors are fully qualified and can run the holding company business on its own. Now, because you don't need to meet the full substance requirements, you're not required to be directed and managed in the UAE or have adequate expenditure in the UAE. And one of the common questions that asked, is whether, what if you're a holding company and you undertake another relevant activity, or you own some other form of assets apart from shares? Now, you need to assess it on case-by-case basis, but basically, if you're a holding company and you undertake another sort of relevant activity, such as a lease finance business, or you're a service center, you provide services to your foreign related parties, then you would actually have to demonstrate the normal economic substance requirements for that other relevant activity. And therefore, your core income generating activity will be those associated with the income generated from that other relevant activity. Okay, so moving on. So on the other hand, if you're carrying on a high-risk IP business, an intellectual property business, then you'll be subject to a heavy set of substance requirements under the regulations. Now, I'll come on to the reasons why you're subject to a heavier evidentiary threshold. But essentially, if you're an IP business, and IP business means that you hold, exploit, or receive income from an IP asset, being patents, copyrights, trademarks, technical know-how, etc., and that income from the IP asset consists of a separate identifiable income such as royalties, franchise fees, licensing fees, capital gains from the sale of your IP, then that means that you actually carry out an IP business. Now, if you carry on an IP business and one of those conditions on the slide applies to you, then you'll be considered as high risk for economic substance regime purposes. Now, let's see. The first condition is that if you're a licensee and you didn't create that IP asset which you hold for the purposes of your business, and you acquired that IP asset from your related party, or that's in consideration for funding research and development by that other person situated outside the UAE. And if you license that IP asset onto your related party and you generate income from that IP asset, then you would fulfill condition A. Or condition B being that you don't carry out the research, development, or branding of that as part of your core income generating activity. So if you fulfill either condition A or condition B, and you conduct an IP business, then you will be considered as a high risk IP business. Now, what does that mean? So if you're a high-risk IP business, the regime automatically presumes that you don't meet the substance requirements. So in other words, you're subject to a higher evidentiary threshold. Now, why is this the case? So as Isabella mentioned earlier, the main focus of the economic substance regime was to ensure that actual economic substance is generated in line with the income that a business is receiving in the UAE. And high-risk IP businesses are generally at a higher risk of artificially shifting profits to low-tax jurisdictions, and hence, this is why a heavy set of rules apply to high-risk IP businesses. Now, coming on to the next slide. To rebut these presumptions, a high-risk IP licensee needs to demonstrate the following. So you need to exercise a high degree of control over the development, the enhancement, the maintenance, protection, and exploitation of your IP assets. Now, these are normally known in the tax role as the DAMP functions of an IP asset. And you normally need to demonstrate this to ensure that your economic value of that IP asset is aligned with the functions and risks of the business. Okay. As a high-risk IP business, you also need to demonstrate that you have adequate full-time employees with the necessary qualifications, and they permanently reside in the UAE and perform all their activities in the UAE. You also need to have a business plan showing the reasons for holding the IP in the UAE, as well as making all your strategic decisions regarding the business in the UAE. So just to sum up, if you're a high-risk IP business and you need to make sure that you demonstrate that you meet the substance requirements to rebut the presumption of non-compliance. So that sums up. The different set of substance requirements. Moving on to the next slide. Now, what do you do if you don't comply with the regulations? As with any set of regulations, there will be sanctions for failure to meet these obligations. And we'll see this in the next slide. Okay, so if you fail to file your notification or provide accurate information, then you'll be looking at a fine ranging from 10,000 dirhams to 50,000 dirhams. You would also be presumed to have failed to demonstrate economic substance in the UAE. Now, if you fail to satisfy the substance test in the first year of your failure, you're looking at a hefty fine that ranges from 10,000 dirhams to 50,000 dirhams. And the authorities would also provide, information about your business to the Ministry of Finance, who would then share this information with the foreign competent authority of the jurisdiction in which your parent company, ultimate parent company, and ultimate beneficial owner resides. Now, it is important to note that if you're a high-risk IP business, the authorities will just share information about your business regardless of whether you meet the substance test or not. And remember, this is because as a high-risk IP business, you're always subject to a heavier set of rules. Now, if you fail to satisfy the economic substance test in your second consecutive year, then you'll be looking at a fine ranging from 10,000 dirhams to 300,000 dirhams. There'll be information exchange with the foreign competent authorities again, and the authorities also have the discretion to suspend, withdraw, or not renew your licenses. All right, so this sums up part one of our presentation today, and I will walk you through the latest developments in the regime in the next slide. All right, so we thought it'd be useful to actually show you the timeline of developments that have happened so far on this front. And you'll see on 30th April, as you know, last year, the economic substance regulations were issued. And then 5 months later, you have the ministerial decisions on, explaining how can you meet the economic substance requirements, and the cabinet resolution, determining the regulatory authorities. Now, earlier on this year, you also have the cabinet resolution amending the regulations, which clarified that companies with more than 51% direct or indirect ownership by the government or any government authority or entities would be exempt from the regulations. In January to February as well, the Ministry of Finance, published further guidance in the form of FAQs, flowcharts, and also a helpful summary of relevant activities and their core income generating activities. Now, more recently, last month, the Ministry of Finance issued another guidance, elaborating on the type of relevant activities and their associated core income generating activities. And in the first half, you would have seen various announcements by regulatory authorities on your obligation to file notifications. Right, I'll come on to this now in the next slide. So under the regulations, it specifies that regulatory authorities would specify the time and manner in which you should file your notification. So you would have probably received, some sort of communication from your regulatory authority announcing deadlines to file this notification. And we understand that, certain regulatory authorities have specified deadlines apart from the 30th of June. But more recently, last Thursday, the Ministry of Finance issued a COVID-19 industry advisory notification. So in this notification, the Ministry of Finance actually recognized the impact and disruption of COVID-19 to businesses, brought on by travel disruptions or quarantine measures. So this notification actually confirms that the notification filing deadline would be extended to 30th of June, 2020. Now, you should note that the substance return filing deadline has remained unchanged. So if your financial year ends in 31st December 2019, then the deadline to file the return would be the end of this year. Now, one interesting thing to note, and Nov has also mentioned earlier, is that the Ministry of Finance takes into account the impact of this COVID-19 restrictions on the operations of licensees. So in particular, in terms of fulfilling the directed and managed test, do we take into account how this has impacted businesses in making the board decisions in the UAE? Now, it is important to note that this only applies to periods affected by COVID-19. So in other words, this notification would actually affect your filing for next year. Now, an interesting question that we've been seeing so far is that who is subject to this notification obligation? Is it just limited to entities which carry out a relevant activity, or does it extend to all entities, including those which do not carry out relevant activity? So technically speaking, Article 8 of the substance regulations, it requires licensees to file the notification annually. And by definition, licensees are persons licensed by authorities to carry out a relevant activity. So that means that you would need to actually carry out a relevant activity before you're subject to this filing obligation. Now, the Ministry of Finance has confirmed this point as well in their FAQs. However, it would be prudent to also check this with your regulatory authorities, as some regulatory authorities, such as the DIFC or DMTC, requires all entities, regardless of whether you carry out a relevant activity or not, to file this notification to state whether you're carrying on a relevant activity, etc., before the 30th of June. While ADGM only requires those which carry out relevant activities to file this notification. So hopefully this brings you up to speed with the latest developments in this space. I would now hand over to my colleague Shiraz, who will walk you through the next steps that you should take.
Hi, Shiraz Khan here. I'm the head of tax at Al Tamimi. I think we have Isabella back online now, so I'll allow Isabella to complete her section before I move on to my section. Over to you, Isabella.
Thank you, Shiraz. I would like us to go back, please, to where we left off. And yes, so I already am. Yes, we're going back. Perfect. Yes. This is ideal, okay. Applicable legislation we covered, and sincere apologies really to all the participants for that technical issue. Okay, so let me move the slides. So we can go to the next one, and let me see if I have, yes, okay, I already, and the next one. And just to recap quickly, right? So NOF would have taken you through the relevant activities. The important thing to keep in mind is that really there need to be the income generation element and the conduct of relevant activities as well before you know that you would be definitely captured by the regime. And of course, the financial years that we would be talking about as the period of time when those requirements start kicking in, because let's not forget, the economic substance regime starts as we speak, but it will be something that your businesses will need to comply with on an ongoing basis. So of course, those requirements don't end. It's not something you go and do just on a one-off basis and that's it. No, if the regime applies to you, then of course it will then be with you 4 years going forward. And under the next slide, we just see here now the exemptions. Now, Janet mentioned that there are governmental and semi-governmental entities that would not fall under the regime, and this is precisely that. So if the entity in question is directly or indirect through a chain of different types of vehicles owned by a UAE governmental body. It can be one of the federal bodies, but it can be also a body at the level of the emirate. That entity itself, so long as we're looking at 51% or actually 50 plus 1 share, if you like, right, of that direct or indirect ownership, then that entity is not subject to the economic substance requirement. Now, under exemption 2, which is under our next slide, then we will demonstrate another scenario where the regime will not apply to you, right? So the legislation says, well, don't worry if you are in fact an entity privately owned and you do in fact carry out the relevant activity or more than one of those relevant activities. But actually those activities that you carry out don't generate any income. There is no income generated. Then again, the regime, broadly speaking, applies to your entity, but in a given period of time, there is no income generated. So again, you don't need to worry about satisfying the requirements of economic substance. And moving on, just for illustration, now, if your business does not conduct the relevant activity, then you don't need to consider the details of the economic substance regime at all, because that regime would not be applicable to you. For example, if a business carries out trading activities, and so it's buying goods, selling goods, and then really distribution of those goods on the ground. That activity, regardless of actually what is being bought and sold, being a general trading activity, does not get captured by the economic substance regime. And, you know, just high-level clarification why possibly some of those activities do get captured and some of them don't. There are business activities that in their nature would require substance to be conducted. And these are the activities where authorities really have little or no doubt that the economic substance requirement would be satisfied because otherwise the entity would really not be able to carry out those activities it's licensed to carry out. Certain activities by default satisfy the economic substance, and they are not really under the economic substance regime radar. And now, Shiraz, it's back to you on, of course, the way forward and the next steps for the companies under the regime.
Thank you, Isabella. I think the team have done a great job in talking about the scope of the regulations and how they affect you. And really in this section, I'm not going to repeat a lot of that. What I will do is summarize the key implications for you and what it means for you practically. So I've summarized in very, very simple terms what you need to do next. To start off with, the first thing you need to do is review the applicability of the economic substance regulations. And this means that you need to look at your corporate structure and you need to determine what entities and what activities fall within the scope of the economic substance regulations. In simple terms, it just means you need to determine if you're carrying on a relevant activity. And obviously the relevant activities, there's 10 of them. Well, there's actually 9, but the shared services and the distribution are essentially 2 activities. The second step is you need to assess whether economic substance test has been met. So this means a number of things. Firstly, it means that you need to undertake core income generating activities. You also need to be directed and managed in the UAE. And I think Nof touched on this, and so did Janet. Essentially, you need to have local board meetings with adequate frequency. You need to have a quorum of directors physically present. You need to have your directors need to have sufficient knowledge and experience in relation to their positions. And you also need to document and keep the local minutes of the board meetings. In addition to the direct manager control test, you also need to meet the adequacy test. And again, this has been discussed already, but just to summarize, you need to have qualified employees. You need to incur expenses proportionate to the activities locally. And you need to also have assets and premises from which you operate. And in terms of the core income generating activities and the adequacy test, this can be satisfied through outsourcing, but not the direct managed control test. That cannot be satisfied through outsourcing. So you need to have directors who satisfy that test. And again, I think the team mentioned that there's less stringent requirements for holding companies, whereas there's tougher requirements for high-risk IP businesses. Now to move on to the third point, I think it's very, very important that in light of these economic substance regulations, and if you want to comply, that you actually look at what you're doing now. I call this as the as-is situation. So essentially, you need to ultimately comply, which means implementing any changes which are required to your business and operating model in order to ensure compliance. And at this stage, you may not necessarily be compliant. So the first thing you need to do is look at the as-is situation, and you need to look at your existing and current level of operating substance and corporate governance framework, and then identify any gaps. So if you have, you need to compare them with the requirements under the economic substance regulations and see if you actually meet them or not. And if you don't meet them, you need to take remedial action to ensure compliance. And also you need to document that you satisfy the economic substance requirements. And I'll come on to that a bit later on, why that is very important. You also need to document a number of other things as well. So for example, if you're being directed and managed outside the UAE for the moment, obviously we've got a unique situation going on with COVID-19. And the Ministry of Finance released a very good relaxation for people that have been affected by the COVID-19 situation. So if you've got directors which are stranded in other countries and they can't come to the UAE to have local board meetings, you could actually document that, and they won't hold you accountable insofar as it's been affected by the situation. On the other hand, you could always consider appointing locally board directors on a temporary basis. So these are some of the measures that you can take. Also, I mentioned the outsourcing requirement, and this isn't straightforward. So you may be thinking that now we've outsourced some of the functions and some of the expenses and we're great, but there's a lot of work to be done in this regard as well. You essentially need to put in place a mechanism to have oversight and control over the outsourced activity. And you need to essentially monitor the outsourced activities, which imposes a burden on you. And in addition to that, you can't just outsource to someone outside the UAE. It needs to be in the UAE. So I guess the point is, there are additional requirements that you have to meet. It's not all very straightforward. Now, moving on to the next one, the notification filing. So of course, as my colleagues discussed, most of these requirements are imminent. So most regulatory authorities will require you to notify them before 30 June. Some of them may require, I think the Ministry of Finance required them to notify the Ministry of Finance by that date. However, some of them require you to notify them at an earlier stage to give them time to collect the information and to then deliver and share that information with the Ministry of Finance. And I think, as Janet was saying, don't assume that if you don't have a relevant activity, there's no notification requirement. Some regulatory authorities may require you to notify, irrespective of whether you're carrying on a relevant activity or not. So you need to monitor each regulatory authority on an individual basis to make sure that you get this right. And it makes sense, to require everyone to notify in a way, because by its very nature, these requirements are on a self-assessment basis. So if the authority gets everyone to notify them, it gives them the information in relation to every entity, and then they could undertake an audit, whether in terms of who's complied and who hasn't complied. The final requirement is to prepare and submit an economic substance return or report, and this is required 12 months before the end, after the end of the financial year. And I'll come on to, I'll give some specific examples in that regard. I mentioned that I wanted to share some practical experience with you, and you'll notice in these points that I have here, the notification and the submission of the report are the last two, and the first three precede that. So there is some work to be done before you actually notify and even submit the report. What we've experienced is that a lot of clients have been focusing on the notification requirement and even the reporting requirement, but these are only two of the requirements. It's not enough to focus on these two, and then even if you notify on time, even if you submit your report on time, you could still be non-compliant, because the whole purpose of these regulations is to ensure that you comply with economic substance requirements, that you effectively have economic substance in the UAE. So this is a critically important requirement. And in the event that you for example, you don't report or you report incorrectly, penalties will be applicable. What the clients haven't appreciated is that there's a significant amount of work to be done before you notify and report, as I said. And again, the notification is required almost immediately before the end of this month at the very latest. And the first report will likely be due for most companies with a December 2019 year end at the end of this year, so 31st December 20. So there's very, very limited time in order to enable you to take any remedial action if you are not compliant. So this is very, very critical and key here. And any changes you need to implement will need to be implemented before the submission of the report. So for those with a 31 December year end by the end of this year. And I think that once you have notified and you've submitted a report, you'll effectively have met two of the compliance requirements. But once the compliance is over and you've submitted the report, then effectively that compliance phase will be over, and then it's over to the authorities to start monitoring and look at enforcement. So that's going to be the next stage. And the regulatory authorities, they can actually request information from you if you don't notify, or if you notify them incorrectly or submit a report incorrectly that you're compliant with the requirements and you haven't complied. And they could ask you for information to demonstrate the position you've taken, whatever that position is. Again, as a reminder, these obligations, they're very, very serious. So first of all, as my colleagues mentioned, there's a financial implications. 50,000 dirhams in the first year could go up to 300,000 dirhams. In addition to these financial penalties, the regulatory authorities may also impose additional penalties under their own regulatory framework. So they may have some, and I think in the DIFC, for example, it runs into the tens of thousands of dollars. So the financial implications are not just limited to the regulations themselves, but there may be additional penalties which are applicable. Also, there's also a possibility that the Ministry of Finance here, if you don't comply, could report you and share your company's information with foreign jurisdictions. And also, very critically, they could also revoke and suspend your license. So we're talking about massive, massive risk here, and it could really affect adversely your operations, and you may no longer be able to operate if you don't comply with these requirements. So it's very, very key to get your house in order. And I know many of you are keen to be compliant. My message is just to be proactive and manage the risk actively. Don't wait until the last minute and just a few weeks before you do your reporting, and then you find out that you're not compliant. So if you're going to wait till the last month, you're going to give yourself very, very limited time to undertake any remedial action or any reorganization which might be required to bring you within the compliance. And if you leave it to the last minute, it's likely that you're going to end up non-compliant. So again, ultimately, it'll be someone for your organization who'll be responsible for the compliance, whether that's someone from the legal function, the finance function, or a specific compliance function, or even on the operation side. But ultimately, someone's responsible for managing this risk. So as you can imagine, there's a lot at stake here if because of decisions you've taken, your organization is non-compliant and therefore is not able to operate. And it's also very, very important in order to proactively manage this risk that you document the positions that you've taken. So, okay, you've submitted your notification, you've submitted your report, but that's not the end of it. Behind the scenes, you need to have a report which essentially demonstrates that you've complied with the requirements and the positions that you've taken based on what information. So this needs to be there in the background just in case the regulatory authorities later ask you for this information. And again, we don't know what form, we know the format of the notifications already. It's very, very simple. We don't know the format of the reports as yet, but it's not that relevant. I mean, maybe there'll be a detailed reporting format, or maybe it'll follow the notification requirement and be in the form of a questionnaire. But regardless of the form of the reporting and notification, you need to do this background work to demonstrate that you're actually compliant. So you don't need to wait for the notification. You don't need to wait until details of the report are issued by the authorities. I think that will be too late because we already know what the regulations, what they're trying to capture, and what you have to do in order to be compliant. So those were just some of the key messages. Now, just moving on to a couple of examples, just to give you a flavor of when you'd be required to report. So if we're talking about the financial year 1 January to 31st December 2019, this is the reportable period for the purpose of the economic substance regulations. And it's for this period that you need to demonstrate economic substance. So if your year ends on the 31st of December and it began on the 1st of January 2019, before 1 January 2019, there's no requirement. You don't have to satisfy any economic substance. So only for this reportable period. So if your year ends on the 31st December 2019, the report will be required to be submitted within 12 months, so by the end of 31st December 2020. Obviously, the notification is required this month, essentially. For some, it was the previous month. Now, to give you another example, so you might have a situation where your financial year commenced 1 April 2019 and it straddles to 1 January 2020 and it ends on the 31st of March 2020. In this case, again, it's the same consideration. So the reporting period is 1st April 2019 to 31 March 2020. And prior to 1 April, you do not need to demonstrate that you've complied with economic substance requirements. So only for this reporting period. And if your financial year ends on the 31st March 2020, then you'll be required to submit your report before 31st March 2021. I think another thing I wanted to add in terms of the relaxation issued by the Ministry of Finance, that's not going to have any significance for your report for this year. Because of course, assuming that your financial year commenced on the 1st of January 2019 and ended on 31st December 2019, that's already passed, and that was before COVID. So when you're submitting your report, and if you're required to meet, the directed and managed test, is for the period which preceded COVID, so it won't affect that. And again, there was very limited information available at that time during 2019. So it's possible that the authorities may be a bit more relaxed, but it's difficult to say. Of course, you have to comply with all the requirements to the best of your ability. So that's the main substance of the presentation, and I think we'll allow some questions, I think, for the last 5 minutes. I'm just looking through the questions tab. So I'll just give 5 minutes for questions, because there's actually a lot of questions, and we will get back to you by email. So if you've sent a question through this facility, we would receive your details and the question asked. So if we don't get back to you within the next 5 minutes after the presentation, at some point we will drop you a note responding to your queries. But just to deal with a few of these questions, I think the first one is asking about are free zone entities or offshore entities subject to economic substance regulations? So the answer to that is yes. All entities in the UAE, provided that they're carrying on a relevant activity, are required to notify and also submit a report. So it doesn't matter if you're in a free zone, and obviously DIFC and ADGM are examples of free zones. Nevertheless, there's a requirement to comply with economic substance regulations. There's another question here, is that what if the business carries on a relevant activity but does not generate any income from that activity? So I think as Isabella mentioned at the outset of the presentation, there are some exceptions to the economic substance regulations. So if you're carrying on a relevant activity but you don't have any income from that activity, then you're not required to comply with economic substance regulations. However, for regulatory authorities that require everyone to notify, you'll still be required to notify the regulatory authority. But if you don't have any income from the activity, from the relevant activity, then you're not required to comply and submit the report for that particular period. And then obviously for the following year, things may change. I think that there's another question here. If you carry on 2 relevant activities, is 1 or 2 notification or reports required? It actually depends on what the activities are. So if these 2 are separate activities, you need to comply with economic substance requirements in relation to each activity. And therefore, even within your notification, you have to include both activities, and you have to separately demonstrate for each activity that you've complied with the economic substance requirements. However, there can be a case where you just report 1 activity, and this is fairly exceptional, but it would normally happen, for example, where you have 2 activities, and the second activity is ancillary or incidental to the first activity. So essentially, it's a part of the first activity. In that case, you could just notify and report in relation to the first activity. But obviously this is quite risky, so you have to really look at what the activities are. On what basis are you coming to the conclusion that it's incidental and it's ancillary? So I mean, there's no guidance, so you perhaps have to look at the income generated from these activities, the expenses incurred from these activities, the functions, underlying functions. And this is the sort of stuff you have to document. It's not there. And if you're to tell me that you have two activities, but both of them are separate or one's incidental to the other, it's not straightforward. So if you have to take a decision on it, which you will do before you submit your report, then obviously you need to have a basis why you've taken that decision to demonstrate to the regulatory authority and also for risk management purposes internally. Because ultimately someone from your organization may come to you a year down the line and say, why did you take this decision? And that's why it's critically important, in addition to these compliance requirements, to also document and why you've taken your positions. And it's important to manage the risk in that way. I'll just deal with one or two more questions. Are you required to comply with if your license does not include a relevant activity? I think the answer is yes, because whether you're subject to the economic substance regulations and you're required to comply, it doesn't really depend on what activity you've got in your license. It depends on what you're actually doing. And I think the Ministry of Finance clarified that, very clearly, saying that it's a substance over form approach, which makes sense because a lot of companies here, they may be carrying activities they're not licensed for and vice versa. But economic substance is all about what you're doing. So obviously, if you're carrying on an activity that is not in your license, then you should update your license and make sure the activity is there. But the focus shouldn't be just license activities. You should actually focus on what you're actually doing, what you're generating income from. And if that's not in your license, it needs to be updated, and you also need to meet the economic substance requirements. Just one final question then. If you have multiple entities in a group, is one notification report required for the group? So essentially, if you have a group of companies and you may have different companies operating in different jurisdictions, one may be in the free zone, one may be in the mainland, another one may be in another free zone. So each of these entities, you have to effectively satisfy economic substance on a standalone basis. So you don't consolidate all the companies in the group. You look at each company on a standalone basis, and for each licensee, you have to satisfy economic substance. I think if Isabella, Janet, and Nof, if you have any other questions that you feel that we could just answer in the next few minutes, that's fine. Otherwise, we'll close the presentation. So over to you guys. If there's any questions, okay. There's been lots of questions. So sorry. There's been lots of questions, so we will get back to you by email. Obviously, it's not practical to go through all of them because there's lots and lots of questions. So we will get back to you by way of email. Thank you for joining us, and apologies for the technical glitch earlier on. It's just a demonstration of the world we're living in at the moment with COVID-19, and so we have to deal with these situations. But again, thank you very much for joining us. I hope the presentation was helpful and informative, and do let us know if we could be of further assistance. Thank you.